Welcome back to the show, everybody. Check out these headlines here. Matter of fact, let me give it to you like this. U.S. digital dollar runs on XRP XLM highways, value protocols, confirmed. It is at my house. Will it be at yours? Let's roll that beautiful intro and find out.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow me on Twitter at Dig Perspectives at the top of the screen. Everything that we're talking about here today. We are below $1 trillion, ladies and gentlemen. How about that? For the first time in a long time, we are below $1 trillion for the crypto market cap. I tell you right now, it is buying time at my house, not financial advice, my digital perspectives. I'm doing what I can. Bitcoin right now is 22,000, almost even. We see Ethereum at 1,100 and XRP is at 31 cents. We see we are off on Bitcoin by 29.9, 36.7 for Ethereum, and 22.6 for XRP this morning. Very quickly, the range of price here, 29 to 33 cents. We'll keep an eye on it. Take a look at this. Dark Defender says XRP reversal log is below in the weekly wave trend. It is at the lowest level since XRP is in use. Take a look at this. If you take a look at this, look, this is where we are. Current indication is we're lower than the lawsuit level when it hit. In the entire use of XRP, the asset, it is lower than it ever has been before. That is unbelievable. But you know what? I remain diamond hands today, ladies and gentlemen, because I understand the use case and I understand that what's happening currently right now, I believe, is a flushing out of the market. You know, as Warren Buffett has said, you know, when the tide goes out, we're going to find out who's been swimming without any trunks on. That's really the moment we're in here. But I believe we come out the other side of this moment at the very least, as Senator Gillibrand said, with stablecoin legislation and still crypto legislation to go. Breaking right now, the White House is watching the stock market very closely, according to the White House press secretary. Well, as you can see, there isn't much fun watching this red board with everything losing. Look, I love crypto, and I have a huge appetite for high risk investments. But one of the things that makes me feel good about doing that is Glint Pay. It's gold is the security and Glint is its key, and gold is my security. Glint Pay is my key. You can buy, save, and send and spend your dollars and buy gold, real gold, and send it back and forth on there as well as spend it. Hedge inflation, hedge the moment you're in. I'm hedging right now this crypto asset market, which I love, and it makes me feel good that I can do it. There's a link underneath the video. Right here, we see breaking. Coinbase plans to lay off 18% of its workforce due to the crash in crypto prices. Take a listen to this. It's important. Check it out.
Kate Rooney joins us now with more. Give it to us, Kate.
Hey, Joe, that's right. This morning, Coinbase just telling employees in an email that it plans to lay off 18% of its workforce. That comes out to roughly 900 employees. CEO Brian Armstrong saying, quote, "We appear to be entering a recession after a 10-plus year economic boom." This is in an email this morning to employees. The company, quote, "grew too quickly," as he said, and Coinbase needs to manage its burn rate and increase efficiency. It comes amid an almost 80% drop in Coinbase's stock this year and a crash in crypto prices recently. I sat down with Coinbase president and chief operating officer Emily Choi at the end of last week. Ahead of this news, she says it was difficult but a necessary decision, and they've lived through similar downturns before.
We have $6 billion of cash on the balance sheet, and we've been through 4 crypto winters before. We will power through any macro environment, any crypto winter, anything that's coming. That's what we're made of. The reality, though, is that we have to adjust when we feel that there is a very dynamic economic environment in play, and so we're going to make those decisions based on those factors.
Coinbase had put a pause on hiring, then 2 weeks later extended that and rescinded some job offers. Hardly the only tech company here to cut jobs in this market, but the latest crypto company to do so. And guys, the layoffs come as JP Morgan downgrades the stock this morning, cutting the price target by more than half. Analysts there say they see the potential for more downside if cryptocurrency markets don't stabilize, and talked about a need for management to lower costs.
There you have it. And that is being felt all around crypto.com, BlockFi. There's a lot of layoffs all the way across the board here. And I feel for the people that are being affected by that. Now, I want to point this out. No coincidence, says Cowboy Crypto here. Tether has 3 investments and one is Celsius. You look right here and you can see it. You know, I have said that, USD Tether is in the crosshairs and has been for a very, very long time. This is really, really something here to be paying attention to. I do believe that we could be seeing the wings clip that supports and underpins Tether at this time. It says here, Tether loses its USD, or Tether loses dollar peg again after Celsius freezes withdrawals. It doesn't have a real flash crash here, but it just dips below to 0.9959. However, full disclosure, Tether says the recent events impacting Celsius lending platform and its native token are unfortunate results of market volatility and extreme market conditions, Tether said in a statement. While Tether's investment portfolio does include an investment in the company Celsius, representing a minimal part of our shareholders' equity, there is no correlation between this investment and our own reserve or stability. So, full disclosure, however, you have to wonder again if this is not yet another keystone moment here, or another important building block that holds, foundation block that holds this company or Tether together, and that this could really make for a disaster for Tether in the near term. Nexo reaches out and says, after what appears to be the insolvency of Celsius Network and mindful of the repercussions for the retail investors and the crypto community, Nexo has extended a formal offer to acquire qualifying assets of Celsius Network after their withdrawal freeze. It says here, operating a sustainable business for 4+ years based on solid fundamentals and prudent risk management. Nexo is in a strong liquidity and equity position as evidenced by the only real-time reserves attestation of a blockchain finance company. They firmly believe that acquiring all parts of Celsius qualifying outstanding collateralized loan receivables will go a long way in providing immediate liquidity for Celsius Network clients. We are still waiting to hear from their management and will update you. Now, this is XRP Crypto Wolf says Nexo can single-handedly save Celsius customers only if Celsius accepts their offer. So make sure you know what's going on there. We will keep you up to date on that as it unfolds. I just want to say quickly, because we are about to look at some extremely powerful information, ladies and gentlemen. I really do believe at my house that the US dollar, digital dollar, will run on XLM and XRP ledgers. I really do, and I believe you're going to see evidence of that today. But I just want to say in closing on this right here, that, it is this moment that we're in that you will see, I believe, a wave of mergers and acquisitions as this flushing out of the market takes place here. And well, whether this happens or not is another matter. However, on this front, we covered this back in May from Jamie. He was covering XE Currency Exchange. Jamie's out of Canada. Shout out to you. He says, I spoke with an XE Currency Exchange limit increase specialist. They talked about listing cryptos on their platform. She confirmed for him that XRP, XLM, BTC, and others will be going live very soon, she said. But she couldn't give him a date or time, but it is in the works. Stay tuned on that one. Now, I played the first half of this clip and we covered it. This is Christine Lagarde, the former IMF director, now the ECB, European Central Bank president. Really, 27 countries tied to the ECB here. I want you to listen to this whole clip because it then moves into a woman we've heard talk about the economy, an economist who talks about abandoning the current financial system due to the stress it is under. Take a listen here.
Question about this is going over 8 trillion euros now. And isn't what you just told us about the cryptocurrencies, don't we see a gigantic bubble here on your balance sheet with the euro? And isn't this graph very nerve-wracking?
Well, I can tell you that there is 0 crypto assets in the balance sheet of the ECB.
That I know.
Point number one. Well, I just don't want any ambiguity about it.
Yeah.
But you have to think in terms of counterfactual. If we had not decided on March 18th, when we put together the pandemic emergency program and then subsequently increased the volume of commitment that we made to the European Union economies, we would be in a devastated situation. So I don't regret any of that move that we took on that day, which was 4 months into my job, to significantly increase the size of the balance sheet, because that's all we had.
Yeah.
Otherwise, the economy would have collapsed and it would have been even accelerated by a financial crisis.
You had to do it. It was the COVID crisis. You say that's what we needed to do. But how do you get it?
It will come. It will come. In due course. Yeah.
She doesn't say how. She just says very confidently, it will come. Now listen to this.
How?
In due course, it will come.
Yeah.
She doesn't say how. She just says in due course it will come. She refuses to answer how. But maybe this is how.
If the size of your debt problem is so big that it can't be paid off, and if...
By the way, very quickly, this is an economist here who is special assistant, served as special assistant to the President of the United States, George W. Bush, for economic policy.
In fact, even inflation, which is the usual way you would seek to default on your debt slowly over time, you can't get enough inflation generated, then there is one further option, and that is you literally abandon the entire system of money and accounting. And I know that sounds unbelievably radical, but we've seen it happen before. And I explained the example of Britain in 1834, when they abandoned the traditional system they'd used for 1,000 years at that time, which was called the tally stick system. Anyway, bottom line was, why would you abandon a system that's worked perfectly beautifully for 1,000 years? And the answer is you had 200 years of war debts that had accumulated. They were unable to get inflation up enough without causing social unrest. And so the government said, hey, let's actually take the tally sticks back and give people this great new innovation called paper money. Now, we're on the brink of a similar step change. And the way you'll do it is you're going to move to electronic money in conjunction with blockchain. Blockchain is the new ledger and e-money is the new currency. The question is, whose e-money?
That is the question. Whose e-money? Well, you know what? Harvard's got something to say about that. Shout out to Nathan Price, who absolutely puts this over the fence and into the parking lot. This is the document he provided a source on right here from Harvard Office of the Vice Provost for Advances in Learning. And you can get that from this thread on my Twitter. Shout out to you, Nathan. Harvard Digital Dollar. The road to U.S. digital dollar and integrated cross-border payment solution. Now, stay with me now. We're about to get very deep very quickly. We just heard former special assistant economist to a president talk about abandoning the system, the monetary system that exists today, because it is fully broken, and give a historical example about how it's happened in the past. Well, take a look right here. This may be that new system. The digital 21st century is underserved by an analog reserve currency. A digital dollar would help future-proof the greenback and allow individuals and global enterprises to make payments in dollars irrespective of space and time. Chris Giancarlo, Digital Dollar Project. We look here and see the roadmap first step by feds US CBDC August 21. Then it shows a question mark here for 22. Fed Now Digital Dollar System 2023. Blockchain AI, which is obviously artificial intelligence, machine language, and integration by 2024. Blockchain technology is sufficiently matured to address needs of fiat currency in digital format. In addition, AI, machine language, and are evolving rapidly. FX trading platforms are now AI, somewhat machine language compatible. Smartphone and internet-based global and national trade have expanded significantly to the tune of $1 trillion in 2020. Two blockchain-based protocols, Ripple XRP and Stellar Lumens XLM, are gaining popularity as the coins of choice for many and international businesses. Take a look at this. This here says, what is a digital dollar? What are the salient features? It goes through and breaks all those down. We all know what they are, but let's take a look at this. A simple blockchain-based cross-border digital currency transaction using XRP or XLM, laid out right here, U.S. patent showing digital fiat currency right there. This is Harvard Office of the Vice Provost for Advances in Learning. Take a look at this. This goes through the process and steps for the sender, the ML-controlled FX interface, and process steps for receiver. You can see fiat to XRP or XLM, depending on instructions. You can see immutable verification implemented through XRP blockchain, execution controlled by ML, implemented smart contract by the sender and receiver funds and XRP and XLM tokens. Receiver again converts crypto to her choice of fiat currency, instantaneous or at a future date, meaning you could hold it in that token as well. Take a look. Now let's look at this, because I wanted to show you also, I believe there was one more slide I wanted to show you in this, and I believe it is right here. Goes through this, basics of XLM and XRP blockchains. Listen to what it says here. XLM blockchain, Stellar, and the attendant native cryptocurrency Lumens XLM are interesting concepts. In simplest terms, XLM is a global currency. A global currency. Have we not been asking the question if XRP or XLM could serve as a global stablecoin the way that the FSB has said? Global stablecoin, right? What are we talking about here? We're starting to see some alignment in the verbiage here, I believe, ladies and gentlemen. Currency like without borders. XLM is a global currency like currency without borders that can be redeemed in any fiat currency of choice, lest that be dollars, British pounds, bitcoins, or Indian rupees. Global stablecoin with the potential reach across multiple jurisdictions and potential to achieve substantial volume. I'm loving what I'm seeing here, ladies and gentlemen. I'm loving what I'm seeing here. Ripple protocol is able to process secure and reliable transactions in a matter of seconds. The length of time required for one round of consensus to complete. These transactions are provably secure up to the predetermined bounds. Ripple white papers there as of 2014. Admittedly, due to its protocol consensus algorithm, it is super fast and is more amendable to transfer payments than Bitcoin. That is remarkable. Now let's take a look at this, because I want to give this to you in order here. So let's take a look at this now. Now remember what I just showed to you the other day here from Wheezy. This is Gary Gensler in September of 2018 explaining that Ripple has a bridge currency, but the two things he points out here is that the bridge currency would need to be, wait for it, stable in price. And at this time points out that they didn't have the enterprise relationships that they currently do today.
But to go between Tanzania and Nigeria, you need somebody to bear some counterparty risk that the ledgers both move and are adjusted at the same time. and usually it's a bank that is in both countries. You could use blockchain, but the current thinking is you need a bridge currency in between, and that bridge could be a stable value.
That bridge could be a stable value, but listen to what he says.
That's backed by the U.S. dollar or the euro.
Backed by the U.S. dollar or the euro. Now that's what we're talking about, but it could be a stable value.
It could be a currency, even like Ripple has an alternative. It's just piloted in May, so it's not yet up in any enterprise-wide level.
However, it is today, right? That's what we're talking about. And take a look at this. Let me play this for you again very quickly here. Okay, so now I'm going to set this clip up and I want to show you something. I'm going to let this play from 10 seconds in. Listen to what he says and look at this diagram that I have for you. We're going to talk about it. Check it out.
The central bank would actually create their own token, a digital euro, digital dollar, whatever the market is, and that becomes the digital asset.
As the native coin.
The native coin, yeah. Now, where XRP could come into play potentially is when you're looking at cross-border CBDCs. So when you have a digital dollar and you have a digital, real, or digital pound, you obviously need to have some way to interact cross-border. Yeah. So I think the BIS call this a multi-CBDC model. One of the ideas is you use a sort of a neutral bridge currency to go from one to the other, similar to the model I explained earlier, with our on-demand liquidity. But the core offering really is not XRP. There's no XRP involved. It's the native token is the CBDC.
That's interesting.
There you have it. And damn right it's interesting. Shout out to them for sharing it. Now I want to give you this. Remember this? This is Christian Carlo talking to the Federalist Society, when he talks about the problem with having the private sector run a stable coin with the value protocol. I believe the suggestion here, because I asked Christian Carlo what he's talking about, he references how Twitter has been outsourcing censorship for the government and the current administration. And we've been witnessing that. Take a listen to this clip very quickly here.
And so I think the only way we're going to really generally protect privacy is not to have a central bank digital currency in the first place.
Okay, Chris, you have one more comment.
Well, but the problem with not having an entity that's governed by a constitutional right to privacy prevailing money means that unless there's statutory protection, you could have the government doing the same thing to big tech stablecoin operators that they do to big tech social media platforms, and basically impose upon them the things the government couldn't do itself by censoring speech, which is what happens today. So you could envision a world, in fact, where the safest place in terms of privacy may be a government subject to the Fourth Amendment, as opposed to a big tech company that will do things government tells it to do, as it does today with censoring speech online.
That hit me so hard, I couldn't believe it. And this is where I really got to a place where I was like, you know what? I had to ask Christian Carlo. Christian Carlo, are you suggesting that the government should consider adopting a protocol of value for the internet to ensure that the Fourth Amendment and other freedoms and privacy are respected for the new financial system / digital dollar? Chris answers back here, it's worth considering. Thank you, Chris. I believe we are starting to see the pieces to the puzzle here, ladies and gentlemen, coming together and be revealed to all of us. Now let's take a look at this.
But I think that the technology itself, with Satoshi Nakamoto, whoever she or he was, sort of has been a catalyst for change. It's around the globe. Those in the payment business, central banks and private sector have started to think about payment systems a little bit different. There's some competition, so to speak, from decentralized bearer forms of value transfer. Now, some people will call it currency, but none of these projects have really taken on a full general embodiment of a medium of exchange, unit of account, and store of value. Bitcoin's being used for ransomware around the globe. There's like incentives here to use a bearer form of value transfer. And that's what a lot of this is. It's a bearer form of value transfer. We already have digital money.
Yeah.
We have digital money.
Yeah.
We use it every day of the week. We use digital money. So what do you mean when you say you view...
let me try and make this easy. Bearer instruments, we've dealt with for the last 50 years. We don't tolerate bearer instruments.
It took 2 or 3 years. It took, yes, an enforcement action. Yes, it took the definition of what is a security. In that case, I think it might have been the Howey test, but it might have been another one. It's called the Howey test. There's other broad brushes with regard to this as well, as to when something is a note, called the Reeves test that Thurgood Marshall wrote.
Looks a lot like a securities offering, right? And so we're going to treat that as a securities offering. We're going to regulate that. And so that's kind of how we look at it through that lens. Now, there are other pieces of the definition of security, like what's a note, that may come up in the crypto context as well. So that's kind of how we look at it through that lens. Now, there are other pieces of the definition of security, like what's a note.
When something is a note, ladies and gentlemen, and I believe in order to come out the other side of this moment that we are in, clarity for XRP must define what that means to be a note. And I certainly believe at my house, not financial advice, my digital perspective, exactly what Chris Larson suggests right here.
We still don't have the infrastructure perhaps to prevent the next one. And I think this is where digital assets can really help, because an efficient digital asset can really solve some of the key problems in global liquidity. The world's got trillions and trillions of dollars tied up in liquidity just to get around how clunky the movement of value is around the world. If with a really efficient digital asset, something like XRP, again, that's what we believe will be the most efficient, you can now reduce trillions and trillions of capital from being tied up. So you can make those transfers instantly as a bank or as a payment provider or as an enterprise without having to have money pre-positioned all over the world. So that.
And I have to ask, are we in not just a moment where we're seeing crypto be flushed out, but are we in a moment where we're about to see the transition of the old financial system to the new one, giving us a great reset? Make sure you leave a comment below. Check out all the links underneath the video. I'll catch all of you on the next one.